Hi guys, this is Naman again, and in this video, I'll be talking about a trade that I recently took in my personal account, and I lost around 5.5% of my invested capital in this trade. So the name of the stock is Disman Carbogen, and it's also known as DCAL. So my entry in the stock was around 146, 146.2, and my exit was at around 138, and I holded this stock for at least for 20 21 days. So yeah, I lost around like 40 45 48,000 in this trade if we talk about the absolute numbers. So yeah, I'll talk about what made me interested in the stock, or what was the rationale behind the whole trade. So the stock, if I talk to you, the stock was in the downward price channel. Yeah, so the stock was in downward price channel and it broke out in February on great earnings. So if you see here, in this stock had a great earnings, and the stock opened up good 10% up and had a great up move of I think 30 35% on the great earnings report in December quarter. The stock went like 50% up within a matter of 25 days on great earnings, and and then after moving like what 50% in matter of 20 25% or 20 25 days, the stock had to consolidate price wise and time wise, as I always say. So the stock started consolidating, like price wise it had no major upside or major downside, and the time wise also it had a great sideways movement where there was no activity in the stock, nor it was going up or nor it was going down. And then it had some major price correction, where the stock from its top uh, had a correction of at least 20 25%. So yeah, that is how price behaved in last few days, in last few weeks or months. So price broke out from the long downward channel in February on great earnings. Then it had a great up move of 50%. Now, as you can see here, the stock had fallen 20% uh, in this candle. Yeah, in this candle the stock had fallen 20%, and whenever there is this big red candle, a big down day that is done in the chart, or that is there in the chart, that price usually acts as a resistance. As I have already told you that whenever stocks gaps down, that gap down usually acts as a resistance for the right side of chart. So that same thing happened here also, that this 20% down day was acting as a resistance, we can see. So yeah, the high of this red candle of 20% down day candle was 144.90, and that 144.90 was acting as a resistance. So yeah, and stock once tried to cross that price, but it was unsuccessful and stock came crashing down within the base again. And this was the second time it was happening again, and the stock had great volumes. So my entry was around here on the 22nd of June. Yeah, here when when the stock was trying to break out from that high of 144.90, but it didn't close up above the resistance level, that was 14490, and it came within the base. But I thought that was very natural and there was nothing to worry. So I had my first position here, and I bought more around here only. But what was worrying me was that, if you see here, you can see the stock candles had a long wicks up on the upside. In these 3 4 candles, the stock had the candles had a long wicks on the upside, that clearly means that the buyers were not as powerful as sellers, and they couldn't beat sellers up and close the price above 144.90. So that was the first kind of weakness in the stock. But my stop loss was still intact, so I didn't. It bothered me, but I was hopeful, or I was confident that the price might start moving upside from here. But these were the initial signs of weakness in the stock. So I didn't do anything here, but it was kind of worrying. But my stop loss was around, I think, 138.50, and the reason was, I think, one second. Yeah, so I took an exit here around 138.30 because I had the stop loss level 137.80, and I think it hit that level, and my all my shares were sold. So I lost around 48,000 in this trade. Yeah, so the only problem, I would still consider this trade, if the stock closes above 144.90, I might still consider the trade and I might re-enter. But yeah, that is how I lost 46,000, like stock after having good consolidation. It came down and hit my stop loss. That was around 137.80. But my average selling price is 138.1 or 138.15. So I think I started my system sold started selling around 138.30, but the average price at which all the stocks were sold were is 138.30. So yeah, the only reason I sold these stocks were it hit my stop loss. And the stop loss was the logic behind the stop loss was pretty simple, that this was the high of the you know this candle was my stop loss, and this stop support was acting as a resistance before. So I thought it would be a great stop loss, so it hit my stop loss, and then I think it closed above that price. So yeah, that is how I took an exit from the stock. It has been one of the worst trade that I've taken recently, because if I have to show you what pattern the stock was developing. So it was developing in symmetrical triangle around the resistance, and that's a great pattern when these patterns kind of happen around the resistance. But it broke down from that pattern also. So yeah, it is one of those tough trades that I took and lost around like 5%, 5.5% of initial capital. But I might still again look for entry in the stock, because the structure is still intact, and there is nothing to worry about the structure for now. It might have hit my stop loss, but I might again look for entry in the stock again. So yeah, this is how uh, I took an entry in the stock and then took an exit. Also, if you see around here, there was this gap down. I think the stock had a bad March quarter, had a bad quarter. So I think stock gap down around 13%. But that gap down was, I think, the lowest that the stock made in the last few days, and then since then the stock has rallied only upside and not downside. So yeah, I lost around 5% of my capital, but I might still look for the opportunities in the stock again. So yeah, this is it from me, guys. Thank you so much for watching this video.